Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day to start things off. Bitcoin had a big 2019 with a 101% jump in price from $3,700 to around $7,500 at the time of publishing, according to CoinMarketCap. But despite its blockbuster performance, Bitcoin is not the #1 crypto asset of the year in terms of performance. That honor goes to Binance Coin, which surged from $6.16 at the start of the year to its current price of around $15.69, a 154% increase. Out of the top 10 coins by market cap, only 2 are ending the year in the red, and they are XRP and Stellar Lumens. XRP began the year at 35 cents and is currently at 22 cents, a loss of 35%. Stellar Lumens began the year at 11 cents and is currently at 5 cents, which is a loss of 50% in value. Bloomberg just released a visualization showing how the top 10 coins by market cap have performed year to date, with Litecoin and Bcash also having standout years. Here's a little chart right here. For those of you not looking at the screen, Bitcoin is up by 98%. Ethereum is up by only 10%. XRP is down by 38%. Tether. Bcash is up by 38%. Litecoin is up by which also kind of makes no sense. Litecoin is up by 47%. Oddly enough, even after the move down after the halving. EOS is up by only 5%. Binance Coin is up by 150% in value. SV is up by 13%, and Lumens on the Bloomberg chart is down by 40%. Binance Coin surged early this year thanks to the early success of the company's initial exchange offerings. The coin can be used for discounted trading fees on Binance.com and is routinely burned. And actually says it over here for those of you who do not know. I think there were, exactly. Binance initially created 200 million Binance Coin and promised no more coins would ever be created. And I think every quarter or something like that, they burn a bunch of Binance Coin till eventually the point where there will only be 100 million left and there will be no more made after that. They're actually quite popular on the platform, and a couple of other cryptocurrency exchanges as well have also started to list Binance Coin, which is something that I found a little weird. What have you, especially, I mean, you wouldn't really list, like imagine if Apple on their website was selling Microsoft products or like Dell computers. It would be a little odd. However, I guess it makes those exchanges money. Yeah, these are the top 10 coins as far as their gains and or losses. It puts things into perspective a little bit when you kind of look at things this way. I think Binance Coin, I don't know if I could have told you by the beginning of this year that it would have performed this well. But as the year went on, I mean, we constantly had news about Binance. The entire ICO, STO craze kind of crumbled, and it became an IEO phase, an initial exchange offering thing, where you had to pretty much go onto Binance to be able to launch your own coin. I'm pretty sure a lot of the people were also buying up Binance Coin, maybe, allegedly, don't know, in order to have their coins listed. Once again, don't know. But the fact that it is so closely tied to everything, a lot of industry players that we've seen before have mentioned in other videos and articles that we were reading through that they think that Binance Coin could eventually, or Binance itself could be seen as the Apple and or the Amazon and or the Google of the cryptocurrency space within the next 10 to 15 years. The most important part is that nobody knows, but it's fascinating to see the actual growth and losses of the cryptocurrency prices. I want to say, and don't be upset at me, the XRP price going down could be because of some of the things that were promised that did not come true. And I mean also the coins that were sold onto the market every month or so. I don't think we had an actual amount. Maybe we did somewhere of the exact amount of coins that were maybe being purchased by exchanges or by private investors. It was all happening over the counter. But I assume that has had a relatively detrimental effect on the prices. We can see is down by 38%. And lumens, I think it's because the hype of 2018 with lumens came down to the IBM partnership, which then became IBM announcing that they would be using the Lumens blockchain and not the token exclusively, that they would be building stable coins on top of it. So the fees would be paid in Lumens, but they wouldn't be sending billions of dollars back and forth in Lumens exclusively. And also, it's Lumens. I mean, I don't know how to really put it any other way. Anyway, those are the top 10 cryptocurrencies. Here's a bigger chart for those of you who may be looking at your phone and or a tablet. The numbers are right there. I actually tried to open up. It's really funny how time changes things. Little side topic. I tried to open up the link right here to go to Bloomberg, and I went to Bloomberg, and then when I got to Bloomberg, it was like, yeah, you can read this article if you pay us money, and I think it was like $24.99 or $30 or something like that per month, and I was like, news is generally free. Like, there are billions of other websites out there where you can get your news without having to pay, and I think the yearly fee was like $340 or something nonsensical like that. Anyway, here's the photo of what they had on their thing that I got from this little thing right here. Let's move on. Gonna be a bit of a country hop in this one. The Verkhovna Rada, Ukraine's legislator, has approved amendments that introduce legal terms and definitions pertaining to the cryptocurrency space. The new legislation, which aims to transpose the Financial Action Task Force standards into national law, also identifies who is to take responsibility for the oversight of the cryptocurrencies within the country. The draft law of the prevention of the legalization of proceeds from crime and the financing of terrorism and weapons of, oh my gosh, proliferation. What do people, what do they think that we do with crypto? My gosh. This was supported by a significant majority in the Rada. The bill was amended to incorporate virtual assets, which have been described as property as a digital expression of value that can be traded or transferred and used for payment or of investment purposes. Is actually really important. This entire area, right? There we go. Why couldn't I highlight that? Ukraine's anti-money laundering legislation introduced the standards for virtual asset adoption this year by the Financial Action Task Force. The members of the intergovernmental organization recently agreed to monitor and assess the implementation of the crypto requirements in different countries, which was reported in October. The law also introduces the term provider of services related to the transfer, exchange, and storage of virtual assets. The crypto information outlet ForkLog revealed in an article, an interesting detail is that not only can corporate entities, but private individuals as well be allowed to offer such services under the new regulations. So, okay, working backwards. One, this is another country who's given us cryptocurrency regulations. Two, the actual idea that it is property, which means you can own it, which means if someone takes it away from you or steals your computer, you can reclaim it as your own, is actually very, very significant. A lot of other countries were mentioning that when they planned on banning cryptocurrencies, that they would not be seen as property, as value in any way, shape, or form, which is actually terrible, because if a power takes your stuff, you have then no legal claim over it. So this is actually quite important, especially being able to be traded and or transferred or used as a payment method. That's also very important, because if at some point people start having the little QR codes where you can pay in crypto, you are then legally allowed to do so. What was the other part? Yeah, the other part being not only just corporate entities, but apparently, and this is kind of where it gets kind of tricky. Hang with me here. As far as for private individuals being able to offer services to be able to sell, buy, sell, whatever cryptocurrencies. A couple of years ago, about 2 years ago, year and a half ago, somewhere around that time frame, when the Lightning Network was finally becoming a thing, it was launched. I don't know if it was launched in beta, but it was launched. People could use it, yada, yada, yada. What ended up coming up was there were a couple of people were very excited about the Lightning Network coming out, one. The second part was that it would revolutionize the cryptocurrency space and Bitcoin payments, and super quick and fast and awesome, easy. Everyone would be able to use it. On top of that as well, you were able to become a Lightning Network node, which means if you put some of your Bitcoin into the Lightning Network node or into the hub or whatever, you could have payments passing through you. And what ended up happening is that if you had preloaded or had loaded your Bitcoin onto a Lightning Network node and people were sending payments back and forth through your channel, you would be paid the network fee, air quotes, the Lightning Network fee, as transactions were going back and forth. It's not a lot, so don't go Googling it assuming that you'll become rich off of Lightning Network fees. It was actually minuscule, and that was the reason why the Lightning Network had become such a big thing. I think it was around 1 Satoshi. It's nothing. It's like actual dust. The idea was that if the Lightning Network became big, you would potentially... Think of it this way. This is how someone explained it to me and how I heard it in a podcast as well over a year ago. If we enter a future, we enter a future where the Lightning Network becomes huge, monstrous, gigantic, and everyone is using Bitcoin, so and so and so, Bitcoin ends up hitting this mythical, crazy, big 9-digit number, 1 Satoshi would then essentially be $1. If you had, even more so, if things going back and forth through the system, people are using your channel, and on an average day, you had about 100 transactions flowing through it, you would have 100 Satoshis, or the equivalent of $100, yada, yada, yada. You'd be making some pretty good money. When that happened around that time, going back to the point about the entire lawyer thing and making money, they said a lot of things are happening within the cryptocurrency space, and they're afraid that what's going to end up happening is that governments are going to try and figure out, not that they're going to figure out all of the little aspects of the cryptocurrency space, but that they'll try to tax you on these things. So imagine a situation... Stay with me, like I said, where you've been using the Lightning Network for around 5 years. 5 years later, Bitcoin takes off, super high, into the air, money, 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 money. And then you have to go back over the next 5 years to go through all of the data that you have because you've been receiving Satoshis for every single transaction that was flowing through your thing. And this is why the entire thing around here about private individuals being allowed to also offer these money transmission services, it feels like they've gone a step ahead to realize that people will eventually be doing this because there are a number of other projects who also will allow you to have your own node, to have your own so-and-so, to have money be able to flow through you. So I think it's kind of a preemptive thing. Not only are entities or corporates, yada, 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 money, going to be allowed to do this, in the future, we will all be essentially our own bank. We will be able to all have a node and et cetera, et cetera. You understand what I'm saying? It feels like they kind of jumped ahead to make sure they knew that it won't be only institutions and rich people and companies doing these things. It'll also be private individuals who will also be able to have these nodes as well at home. So they want to make sure, ahead of all this, that they'll also be able to ask you for your information and go, well, we see you have a node, and how much money did you make from it? So anyway, that's the Ukraine new legislation crypto news for today. Next country. Next up, the Korean government is preparing legal tools to tax capital gains from the sale of crypto assets. Specialized legislation to target digital asset deals is expected to arrive from the tax season of 2020. Until recently, Korea was the most active market for crypto speculation, but there was no direct... My back is killing me. But there was no direct framework to tax capital gains from the sale, always the sale, of digital assets. This was reported by the Korean Times. The Ministry of Economy and Finance is working on building the measure that will become a tax bill from the next year. Related discussions have been taking place. The revised bill will be drawn up by the first half of next year. The Korean National Assembly has been working on a crypto taxation bill. An eventual bill would increase the transparency on all parts of the process of trading digital coins, but for sure, Korea will try to tax capital gains from the sale of digital assets. Without reading any further, working our way backwards, we mentioned this thousands of other times before. I think myself, governments don't realize that we are not in 1982, that you can make a business online, that you do not have to be in their country. I think a lot of this is a very slow, it's been about a good 2 years of a knee-jerk reaction. Korea and Japan were the places to go to for the cryptocurrency space back then. They controlled the entire market. That is not a joke. They were the reason why we had the kimchi premium, prices going up, prices going back down, because they were in control of the market. People within Korea said, no, we don't like this. The craze is too much. The speculation is too high. etc., etc. And they ended up saying that they wanted to ban cryptocurrencies. The ban never ended up happening. And then they said that they would give some type of a cryptocurrency regulation within this space. And it appears to be exactly what this is. What I am seeing from a lot of countries is that they assume that they can give the same regulations or against something that they would have given to any other thing in the financial sector. But we know and have seen that there are a number of countries, kudos to you once again, who have 0% capital gains tax. There are a couple of them. If you hold your crypto for 6 months, if you hold your crypto for a year, if you hold your crypto for X amount of time and you sell your crypto, there are then no capital gains taxes, especially when certain capital gains taxes around, anywhere from like 21%, 29%. I saw one that was like 30 something percent. Someone mentioned before in France, it was like almost 50%. What? Like, I would just move immediately. I would move to another country. I would become a resident. I would get some type of paperwork and be like, okay, I don't have to pay anything. Interesting story. For those of you who want to hear story time, I went to an event. It was about a good year and a half ago. It was definitely in 2018. It had to be. Having a conversation with a couple of people, they brought up the topic of cryptocurrencies. Everyone was like, yeah, it's, money. We were talking for about a good hour. And this guy next to me was discussing with me how his friend had actually gotten into cryptocurrencies a while ago. And he said there was a certain point where he was calling his friend. He said he saw as the crypto prices were going up at the end of 2017, he called his friend. His friend wasn't picking up. Called his friend 5 days later. His friend wasn't picking up. Called about 3 weeks later, wasn't picking up. He said, what's going on? Where's, I hope he's okay. This guy got back to him and was like, yeah, I've been trying to figure things out. He's like, what do you mean? What's going on? This guy got into Bitcoin super early and had so much Bitcoin that by the time prices were going up by the early December of 2017, he had around, I think $15 million worth of Bitcoin, and the guy was kind of losing his mind. Luckily for him, and here's the gigantic digital cherry on top of all of that. The guy had actually done research. His friend had helped them as well, and they went to like local tax agencies and so and so. And so they were actually living in a country where if you held your crypto for a certain amount of time, there were no taxes on it. This guy ended up cashing out. His friend didn't tell me. Thank goodness. I don't want people telling me how much money they have. Cashed out, I assume, millions. I don't think he took out like 5,000 and was like, I'm good. Millions, and it was all completely tax-free. A lot of these governments don't seem to realize that if people start to realize gains, if people do the math and they're like, I just made 1.5 million. I don't mind being taxed 49% on that. Let it ride. No, they're going to get into a plane, go somewhere else, apply for residency, and cash out over there. Anyway, that's the regulation for tax in Korea. I wish them the best of luck. I'm sure the industry will do very well. I don't think it says a tax percentage anywhere. Nope. Good luck to them, because if the number isn't between 5 to 10%, gonna get shaky, and if it's not less than 5%, Godspeed. Here's the actual article right here from the Korea Times. It says government seeking to levy taxes on virtual currency. Bless them, because I don't think they really don't understand how much the world has changed. Even I was talking with someone a couple of days ago, like how much all of my friends have jobs online. Everyone is doing something, creating content, creating this, creating that. Everything is online right now. I think government leaders really don't understand that we are not about a good 40 years behind where we are right now, that everything is done online. You don't have to stay in one country, because that's not how things work anymore. Let's move on. Here's this ties into what I was talking about just weeks ago. Remember I said it was kind of odd how we had entered into a space where in the summertime everyone was red in the face and was screaming how much they hated Stablecoins, how much everyone hated the idea of a central bank digital currency, how everyone hated the idea of Libra and anything that mimicked it. Everyone hated it. Every bank, all these major banks saw no reason for it. There was no reason to why would we need these things? We're perfectly fine where we are right now. General manager at the Bank for International Settlements, or the BIS, I think it's known as the Central Bank's Bank, Augustin Carstens seems to have changed his negative stance towards central bank digital currencies, now stating that such currencies could open up new possibilities. How weird is that? In his speech entitled "The Future of Money and the Payment System, What Role for Central Banks," published on the 5th of December, Carstens dug into central banks' approach to emerging technologies in regards to building more efficient and inclusive, air quotes, financial systems. Carstens said that the introduction of retail central bank digital currencies, which are available to the general public, including businesses and consumers, could bring serious changes to the financial sector by opening up new possibilities when it comes to the 24/7 availability of payments, different degrees of anonymity, and peer-to-peer transfers. He continued, noting that wholesale central bank digital currencies, where the network participants are financial institutions, banks, could be made compatible with the provision of central bank settlement liquidity. Wholesale central bank digital currencies would not raise difficult financial footprint issues, as they would be largely restricted to institutions that are already using central bank deposits, according to Carstens. How weird that as time has gone on, 4 months, everyone seemingly loves and likes digital currencies now. Remember in 2017, the beginning of 2018, the amount of people who hated the cryptocurrency space? And then all of a sudden, everyone was like, we like it. We've been buying. We've been mining. We're going to start this. We're going to do that. It's the same exact thing with this. We also had news. Who had the slip up last year? There was somebody sitting on a panel last year, and they were asking them, what do you think about the future of digital payments? Do you believe central bank digital currency? Should we have this? Should we so and so? And the person was like, yeah, of course. We want to be able to track what people are doing. And then all of a sudden, silence. No one said anything anymore. Tying directly into what the Bank for International Settlements had to say. Here's the actual thing right here from them on bis.org. The future of money and the payment system, what role for central banks? That was made by the Bank for International Settlements. Tying directly into that right here, Steve Mnuchin, Secretary of the U.S. Treasury, has no issue with the launch of Facebook-led Libra as long as financial rules are followed. He said, I'm fine if Facebook wants to create a digital currency, but they need to be fully compliant with financial secrecy and anti-money laundering rules, he said on Thursday, according to a Bloomberg report. In no way can this be used for terrorist financing. The point is, everyone hated all these things. I said a month ago, isn't it weird how silent everyone is? No one seems to be screaming at the top of their lungs anymore about how much they hate Libra, how much they hate digital currencies, or how much they hate stable coins. Now everyone seems to be fine with it. You also, really, think about all the people, the politicians, the countries who came out against Libra, and now they're all extremely silent. I'm still fairly certain that Libra is going to launch. I don't know if it's going to look like people thought it was going to look back in June, but you'd better believe there's probably something in the works. I assume by the end of this year, if not the beginning of next year, we will have news from the people from Bookface as to exactly what it's going to look like. I don't... we'll see. I was going to say, because they were discussing before the actual usage of stable coins, not Libra, as the actual stuff for Libra, but I mean... it kind of is what it is anyway. We're seeing a shift in the mannerisms, and we've also had a number of countries in the last month. It's between 10 to 15 different countries who are now seemingly also going to create their own central bank digital currency by next year. Kind of weird, right? Nobody was going to do it. They all hated it, and now they're all seemingly on the bandwagon. To kind of finish things off, The IRS, the Internal Revenue Service, recently released instructions for computing taxes involving crypto assets. The digital market has been waiting on this report since 1997. Joking, 2019, after the Revenue's chief, Chuck Rettig, hinted at an update to the existing regulations. In April 2019, some members of Congress wrote to Rettig seeking clarification regarding crypto reporting requirements and related tax consequences. It's taken a long time. This has actually been since the end of 2000. No, this has been since 2016. I remember when years ago, people were like, yeah, I think we're going to get regulations at some point, and it'll probably take them about a good couple of months to give us a tax code. Nope, it took a couple of years. The guidance consists of a revenue ruling section and frequently asked questions. According to Rettig, the IRS is dedicated to increasing citizens' understandings of their tax requirements. In this developing sector, the new directive, he added, would enable taxpayers and industry professionals to understand how prevailing tax principles fit into the ever-changing scene. Where are their most important parts? Shed some light on the relevant requirements and rules and liability. Here we go. Some of the highlighted issues include tax liabilities from crypto forks, computing taxable gains during cryptocurrency sales, and how to estimate cryptocurrency earnings. The document states that new digital currencies developed from a current blockchain fork should be considered as normal income equivalent to the new coin's market price when received. This is only possible if you are in control of the coins. While a hard fork arises when coins in a shared ledger shift, a soft fork is from a protocol switch that does not divert the ledger, hence does not create another cryptocurrency. So if there's a soft fork, you're good. And now I'll get back to the hard fork in 1 second. As such, holding digital coins before hard forks. As such, holding digital coins before a hard fork or immediately after is free of tax penalties. However, a new cryptocurrency's airdrop after a hard fork incurs tax on the airdrop's value. An airdrop spreads crypto units to multiple users' ledger's addresses. Here's the interesting part right here, and it's funny how time works out. If you were with me in 2018, this was a discussion I believe Andreas Antonopoulos had with someone else. I can't remember the exact person, but it feels Andreas Antonopoulos-y. He said, the most interesting fact of what governments could do as far as a tax obligation regulation is they simply say, if you get airdropped something, if a hard fork happens and you receive those coins, then you have to pay taxes. He said, this sounds great because you go with the idea that my coin is great, my coin is awesome, and it can't be hard forked. He said part of the problem is we have people in the cryptocurrency space who think, the easiest way of saying it, the same exact way that Roger Ver and company created Bcash, and the same exact way that what's-his-face, don't remember his name, created Bitcoin Cash, Satoshi's vision. Someone else could simply come out and say after 2 years, I'm going to create the real Bitcoin. And after there's a fork or an upgrade, they create another version of Bitcoin, which then forces you to be obligated to pay taxes on the cryptocurrency that you received. It seems like it couldn't happen, but we've seen it happen before, and this is why I keep saying that a lot of these things are nearly all of the forks, meaning like the coins birthed from the forks, are completely unnecessary because they lead us into a situation where these people, in my opinion, are creating things simply for money. They're not doing it to further humanity or to better the financial world. They're doing it because they want their own money, but they're also then putting you in a spot by making you potentially have to pay extra taxes because of the new protocols that they forked from things that you may already own. It also explains how to find the market price of currencies earned from mining and selling goods and services. When it comes to the cost basis, add the cash spent on buying the coins to the other acquisition costs in US dollars. In addition, the document explains how to work out the cost basis for every crypto unit disposed of through a taxable deal. Take the example of an investor who bought Bitcoin, through different transactions over the years. During the sale, it would be unclear which buying price to use when computing taxable gains. A coin's price determines its value when brought at an exchange. Income basis, therefore, comprises the fees and similar purchase costs. For those of you who have no idea what I'm talking about, imagine you buy a Bitcoin for $1. Imagine a week later you buy a Bitcoin for $10. Imagine a week later you buy a Bitcoin for 100, another week 1,000, another week 10,000, another week 100,000. At a certain point, Bitcoin shoots up to $1 million, and you sell off your 10 or whatever Bitcoin that it adds up to. And you go, yeah, I'm super rich. And then they go, how do you tax this? I tax me on the 10 million. No, when did you buy this Bitcoin? Oh, that Bitcoin? I bought it a week before the other one. How much did you buy this one for? That was about 7-8 years ago. I don't remember. And this Bitcoin, when did you buy that Bitcoin? I don't remember. I remember it wasn't $1 million. And the third Bitcoin, you understand? They want you to be able to say how much you purchased it for and how much the price was when you sold it. When buying the cryptocurrency at a peer-to-peer exchange, you can establish its market value using a price index. According to the IRS, this could be an explorer that checks global price indices or indexes and computes coin values at a particular time and date. Part of the issue might be, for certain people, you might not remember when you bought it. You might have bought it in 2010. You might have bought it in 2012. You might have bought it from a Bitcoin ATM. You might have gotten it from a friend. You might have gotten it from a so-and-so. You don't no, not many people are going to remember the exact prices of when they bought stuff. No one, as far as I know, if you bought gold or silver in 2009, in 2010, in 2011, in 2012, 13, 14, 15, 16, 17, 18, and 19, and then you sold that gold and silver that you accumulated, I don't think they ask you what you got it for before. Anyway, maybe they do. I'm not a gold and seller trader, so I can't really say for certain, but I feel like it's going to be a very interesting season, if I can say that, because the confusion is going to be absolutely maddening for a lot of people. And then they also go into like getting it as a gift. It's far too much to kind of go into. However, this is kind of it. This is the tax regulation that people were waiting for. Not even joking. This is kind of it. I don't think it's going to make major news by any means. But one of the major things that people were talking about since 2018 was, if we sell our crypto, how much will we be taxed on that crypto? And people were saying, well, that's nonsensical. Like, if I made, $800 and I report it, just tax me on the 800. And I said, when Coinbase and all these other places announced that they were getting into the game for financial institutions and financial this and rich people, I said, you're in a whole different space. When you buy, sell, trade, and are doing your stock trading, crypto trading, at the end of the year, you made $45 million through about a good 368 trades. People said they needed tax guidance, and here we are. We know that crypto is not going to be banned within the states. We know that it's legal. I think certain states have different rules and regulations as far as what's it called? Like what they're treated as, or how they're taxed, or how they're yada, yada, yada. This is it. We got it. I don't think it's going to have any significant effect on the market, but logically, one would assume that it would, as they've been talking about this nonsense for the past 2+ years. I think we have, correct me if I'm wrong. Tell me if I'm missing something. What else are we missing as far as regulations for cryptocurrencies? We have licenses, we have this, we have the tax rules. We know which coins, as of now, are commodities outright. We know that other coins that could potentially have been seen as securities are either in discussions with the SEC and or have been publicly shamed by them. I think the main thing was taxes. And it looks like we got them. So, yeah. As always, does anyone ever sit in a chair really weird? If you could see me, I have one leg on like the stool thing. My other leg is halfway across the electrical outlet. I have a hand on my shoulder. I'm holding I look crazy and my back is killing me. As always, a very special thank you to my Patreon supporters. Professor Wally from Gunbot University, The Animal Reader, A Bibliophobia, Barebones Mining, Todd Mullis, Adam Gray Sick, Mohan Maroney, Master Ventures in Thailand, Brady Nields, Woody and Daisy, Triple M and J, Jared Schneider, Wise Night Owl, 242 to the World, Crypto Joe, Bankroll Network, Adobo, Meluizi, Mechanic, Strange Radio Central, Crypto Artist, Coldy 3D, Cryptopolis, Nicholas, Renault, One Piece, One Love, Damien, Setsuna, Nick Kanaya, Richie Richard III, Vlad the Impaler, Crypto Beer Shipmate, Paxis, Nick Mangialavori, Anthony Charles, Jim Gardner, Jeremy Fox, Minting Coins, Miller Hitch Test Every Day and Kyle Skips Leg Day, Yes, 2, Crypto, Bodie McBoatface, Sammy Buucha, Ting Tang, Walla Walla Bing Bang, Anytime Fitness, Monk's Corner Staff, and Shoop Shoop Diddy Wop, Hummer Wang Dang. Thank you all very, very much for your support. The market is the same. Bitcoin dropped by a bit like a couple of hours ago. It was at 7,500. Currently at 74.47. I assume we'll see some type of movement relatively soon as Tether seems to be moving upward. We'll see exactly what's going to happen. Yeah, I mean, the cryptocurrency regulation news that people kept on saying that we needed around the world, we finally have. The tax laws, how it can be used, where it can be so-and-so. Ukraine, Korea, the US, I think many European nations have already done so. I think Germany, France, Spain, Portugal. I'm not too certain about Italy. I'm pretty sure Australia has done it as well, as has Canada. We're still waiting on Russia. We're still waiting on India. We have... It was Korea. We definitely have Japan. I think South Africa also just gave one. There were, I think, 1 or 2 African nations who had announced that it's not going to be banned, but I think they're also working on regulations. Yeah, this is... let's see if they really put their money where their mouth is, because everyone kept on saying that we needed regulations, we needed so-and-so for the cryptocurrency market to be healthy and strong and good, and regulations and stop the people from doing the people stuff, and now we have it. Let's see if anything ends up taking place. I hope you all enjoyed. Hope you all are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. I do hope that it's absolutely fantastic. Thank you all once again for watching and or listening, and I will most certainly be talking to you all soon. See you.